We look at the $1.97 trillion market capitalization. We're clawing our way to the $2 trillion mark, Erika. And I'm interested as to whether you think the hype has reality underneath it, and ultimately whether we will see a leg higher, or whether we'll see a broadening at last in terms of the AI love.
Well, to answer your question, I think yes to both. Jennison has always had a very long-term outlook on trying to dimension what these opportunities are. We've always been very, very positive. We were very early in investing in Nvidia back in 2016, and all of our expectations, even as ambitious as they were, have been absolutely blown out of the water to the upside.
I mean, Jennison is an operator. He manages to guide and then beat, and guide and beat each time, and still managed to be a global business. And I think that's sort of what's been extraordinary, that this is a company that is finding working with China more difficult, largely because of US-Chinese geopolitics. How much do you have to factor that into some of these big tech names?
Well, certainly the political landscape right now is much more challenging for companies as they have restrictions in terms of where they can sell, what they can sell into China. China had risen to about 20% of Nvidia's data center revenue. That contracted down to 5% in the most recent quarter. But what we're seeing is for companies like Nvidia, they've been very nimble, very innovative in terms of coming out with products that comply with all the export laws. Those will start to ship later this year. We believe at Jennison that there's a lot of pent-up demand from those Chinese customers that will contribute to the company's overall performance in the second half.
Let's broaden out from Nvidia, therefore. Is there room, market share, ability and capability for the likes of AMD and some of the other rivals in the space? Should we look to other chip makers?
Our view is yes. At Jennison, we see that Nvidia, in its own process of innovation, has opened up the doors of opportunity for many other companies, from compute companies, as you mentioned, like Advanced Micro Devices and Broadcom, which we own in size, to storage companies, to networking companies, and of course to software companies that are able to harness this incredible compute power to deliver software that enables tremendous gains in productivity and innovation.
Just going back to Nvidia for a moment, is there anything that makes you give pause? A $2 trillion market valuation, an issue of China, or indeed of just like running out of road of exuberance? Or really do you have to go back to, well, forward PE ratios that still make the company look really rather attractive and not that expensive?
Well, what we try to do at Jennison is really take a longer term view. We've actually written some white papers that are on our website about this, but looking out over the entire TAM of the installed base of infrastructure. We see that as a $1 trillion opportunity today, but the very innovation that Nvidia and others are bringing to the table is expanding that TAM. And we're really only maybe 10, 15% penetrated at this point. So we see years of opportunity ahead for further penetration of those markets, further updating to this brand new way of compute, which is known as parallel processing.
Where else in the stack then? Because there is, if you talk to the VC community, yes, they're looking at the underlying compute and the large language models, but they're also looking at the applications and the app layer to AI. But where are you looking from an industry perspective at where artificial intelligence can bring real opportunities for productivity, basically?
Well, there are, of course, the obvious places that people talk about, the big hyperscalers being able to recommend with much more accuracy and targets. Companies like Amazon, Google, using these tools to improve their recommenders. However, one of the, I guess, two big new opportunities that have emerged in the market unexpectedly in 2023 and are accelerating into 2024, one would be the healthcare industry, where companies are using this technology for much faster drug development times. And then also we've seen an extraordinary interest in sovereigns. Countries coming in saying, we want our own version of ChatGPT in our own native language. They have their own sets of concerns with regards to oversight that they can then control, and they are looking for U.S. counterparts to enable them to bring these technologies to the market.
How about the cyber angle of all of this? Because it felt like that was a real tailwind for cyber stocks as well, and then you get the earnings of Palo Alto Networks, and everyone's worried that they're not going to factor in as quickly as people had anticipated. Are there any parts of the technology space that you think is overdone, or the valuations aren't attractive right now?
Well, what we're seeing at Jennison is a real tale of haves and have-nots. Those companies that are bringing technologies to the table that are truly disrupting the industries that they are in, and those companies that may be facing challenges over the longer period, particularly with regards to pricing. People talk about, for example, as you mentioned, cybersecurity. There's so many different flavors of where cybersecurity exists, whether it's in the end market in your phone or your computer, whether it's in your enterprise, or even whether it's within the internet. So one really has to be very careful in looking at the various players, where they exist, whether or not they have pricing power, and the sustainability of that pricing power over a longer period of time.
Is your focus about the US being the outperformer here when it comes to tech? There's been a lot of ongoing narrative as to whether China's ahead with AI or US, and it feels as though the US still is. But where is the global opportunity? Because as we referenced at the top of the show, like European stocks are a record high on the back of this. Japanese stocks managed to go on a record high, and all of us are factoring in AI because of that.
I think that the answer to this question is that the predominance of the opportunities that we see are in the United States. However, there are incredible opportunities overseas as well. For example, ASM lithography has a dominating position in the area of lithography. This is an essential, you cannot get around it in using this tool to make the next generation of semiconductors as well as the older generation of semiconductors. This company is an incredibly innovative company, which is reflected in its margin profile, gross profit margins, operating margins, free cash flow margins. And so we do find opportunities overseas as well, but the majority of the innovation that we're seeing is in the United States today.